Hello everybody and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. Just a real quick note here and I'll remind you at the end. For the next couple of days through April 3rd, I'm actually having a supreme special for a few selected students who actually managed to see this for my alert system. So normally it's like $49.99 and $99.99. But through April 3rd, which is only a couple days away, it's 80% off. So it's $9.80 and $19.80 for either one of those respectively. So it's 80% off and you can keep that price for as long as you maintain uninterrupted service. So check out the attachment if you're interested. No video here. It's just as a resource. It's in the resource section. You can take a look at it there and delve into it deeper. But anyways, let's get back to the market. On a tear like we've seen forever for the last 6 months, just been going straight up. SPY is obviously shooting to the moon, all-time highs. Volatility is very low for the whole market at 11. If we look at the Qs, similar story at all-time highs, been shooting up for 6 months. Volatility fairly low, a little bit higher than SPY, but not really, at 12. The only one that has decent volatility, and this is also at all-time highs, but at least this is at 26, is the Russell. You can see it's fairly high compared to where it's been to itself over the last 6 months. So this is tradable. This is what we're going to trade. But just a quick note as well, what I want you to be aware of in the market is the thing we forget is that as the market goes up, so do the stock prices, obviously, but that also affects the option strike prices. So, simple example I want to show you. This gets harder and harder to do to keep these $2 wide iron condors because stocks are expensive and when they get past a certain price, the strike prices start to change. Simple example, like I said, I'll go to gold, which is what I wanted to trade today because it's at all-time high, not all-time, I think it's at all-time highs actually. But look, volatility is way up here, right? It's at 46, it's kind of near the top of its range over the last 6 months. But if I go to the trade page and I go to 47 days, which would be 46 tomorrow, which is right in our wheelhouse, look what happened. Because the stock has gotten up so high now, above 200, these have become $5 wide strikes. So I can't do a $2 wide iron condor anymore. And even though this is at 205, if I go to, let's say, the 215 and I go down $10 to the 195, you can see I don't collect enough money down here. So equidistant away, I can't pull it off. This vertical is going to be like 20 cents. This one up here, I'm actually on the that's the right side, but on the call side, you can see over here, a little bit better. This is going to be about 70 cents, but this is too small to trade. The 195, 190 is essentially, you get no money for it. So I can't do an iron condor in gold, even though volatility is skyrocketing. And that's kind of the problem everywhere. All the stock prices are so high, all the strikes have become $2.50 to $5 wide. Volatility is low, which means you're not going to get much for your iron condors, etc., etc. So it gets harder and harder to find these trades when we're volatility-based traders to sell iron condors. It kind of forces us at some point to buy verticals. We got to buy a direction, either with betting it's going to go up or down. And those are 50-50 shots. I don't like to do them very often, but sometimes the market just forces you into making trades and you have to pick directions. And we're almost at that level now between kind of the things I'm looking at. There's not a whole lot left to trade if you want to sell something. But anyways, we'll go back to IWM because it's still decent enough volatility that we can make it work for today. So we're going to go here to 47 days, which again, as I mentioned, tomorrow will be 46. The stock price is at 210. Nice little round number there. So I've saved us the trouble. And what I've done is I've gone $11 up and $11 down. And I've bought the call and the put $2 away to make it a $2 wide iron condor. And remember, as long as we're between 66 and 80 cents, this is a valid trade, and it is. So for IWM, at least for tomorrow, assuming everything stays the same, we'll go $11 up and down. We'll create an iron condor that's $2 wide. Look to collect 66 to 80 cents. And that'll be our trade for tomorrow. And if things stay this way and volatility keeps decreasing, you'll see over the next few weeks we'll be forced to do vertical trades, and I'll show you how to do those. And then you'll have to pick a direction, which I generally don't like to do. Iron condors I like because you don't have to pick a direction, you pick a range. When you buy verticals, you have to pick a direction. And I suck at picking direction. So that's your trade for tomorrow. Again, if you want to get my alert services extra cheap for a couple more days, just take a look at the attachment under the resource section. Take a look at it, see what it has to offer. It's an incredible deal. I do this once every few years at the most. So if you manage to see this video, great time to take advantage of this because you can cancel anytime. So it's a great time to try it. If you don't like it, just cancel and you won't be out any, you be out a couple bucks. So anyways, that's our trade for tomorrow. Take care. I will talk to you soon.